Hi everyone, TGIF, good NFP day. Just got up about 15 minutes ago. So I know the news about our president and the first lady. And is that the reason S&Ps are down 54? Okay, well, you know, this 50% level held it twice. Could end up being a pretty negative week if we give it up. Keep in mind that we finished lower. All of this wasn't up. You know, when you look at the weekly chart, let me move this. So it's Friday. I know we have NFP, Hi Brock, Didier, Shahab, Arena. Yeah. So the off number is 33.35. What is MMP? So we're 10 handles under the off number so far. So anyway, 3,400 halfway back. So if we have equality from here, that takes us to 3,000, right? This round numbers, 400 handles. And if this is a high, 400 handles, takes you down to the 3,000 level. Okay. Pretty ugly week. That's a day, and not such a great looking week either. Look at the wick. So we'll see if I don't know how the NFP could bail it this day out for the S&Ps. And I believe I was showing, it's gonna be interesting to see what yields are doing. Okay, so yields are off a little bit here. I thought we had a breakout. Better hold here. So I guess the better triangle is going to be this. Going to be VIX. Yeah. So the breakout continues in VIX. Okay, that's a pretty nice gap. So you guys know, I think today's the last day to get the membership. Anyone taking advantage of it today? And another feature is not much of a bid in the dollar with the S&Ps off. So bought it yesterday, didn't do much. Kind of weak, kind of an ugly week in the dollar unless we get a rally back here. Inside week. Yeah, so you know, I'm still getting the cobwebs out of my head. I woke up 15 minutes ago. I don't know what happened to my alarm. I hope that I hope that we've helped you guys. Is that you, Blake?
Yeah. Hey, it's non-farm payroll day, so I can take. You got up a little late.
Oh, great. Good.
Look, I get it. You know, A, it's Friday. B,
all right.
You know, it's like I got up this morning and it's like I felt like I was thrown into a blender. You know, when you get up and the first thing you hear is President Trump. I knew President Trump was. I knew Hope Hicks.
Oh yeah, that's what I heard last night. Hope Hicks.
Yeah. Before I went to bed, and you know, I told my wife, I'm like, wow, you know that, you know, I'm like, that's, you know, I was like, yikes, you know, because that's really close degrees of separation. You're pushing it really close there. So when I got up this morning, you know, to hear that that you know, Trump is COVID positive, it's like, okay, now I've got to, I'm in the chat room and I got a cup of coffee and I'm trying to come up with okay, here's how I feel. And not a lot's changed from how I feel from 2 hours ago versus right now. But I'll just kind of tell you guys, I don't think a lot's changed, believe it or not. I don't think a lot's changed. Although I do feel there might be a little bit more pressure on Congress to pass this COVID bill now, which, is still in discussion. They're still negotiating, and we might come to some resolution today. So there might be some further pressure on them to put together something. But let's talk about this, and then I'm going to get into the charts because obviously it's non-farm payroll day. So
okay, buddy.
Yeah,
I'll get a cup of coffee. It usually takes me 45 minutes to be able to think.
I get it.
And 2 cups of coffee.
I'm going to give you my thoughts here about Trump and COVID.
All right.
Okay, so let's talk realistically. He's probably going to be fine. There's a really, really high probability he's going to be fine. So if you guys are all, thinking, dark thoughts, don't, because he's probably going to be fine. Is there a chance because of his age and because of his health that things could take a turn for the worse? Sure, there is. But until that happens, I don't think there's any real reason to worry about this specific situation, other than, it's going to push back probably some debates and, who knows. And that's just my opinion. Again, these are just opinions. I'm just giving you my initial thoughts here. Right or wrong, it doesn't really matter, right? We just have to take the data and the information as it comes to us. However, here's the thing that I am a little concerned about. If he fares well, meaning he's asymptomatic, or he gets sick but recovers relatively quickly, that's going to embolden him to really downplay the risk of COVID moving forward. That's a risk to not just, I wouldn't say the markets, but the economy in general. And you can dismiss COVID all you want. I know people that have died, so whatever. You guys can say, oh, it's something else, and okay. I think people died 20, 30 years earlier than should have. So anyway, that's neither here nor there. Your beliefs versus mine. But the risk is he'll downplay COVID a lot. If he gets really sick, then that's but recovers, which I think is that could happen too, because I don't think the worst case scenario is going to happen for him. But there's a chance that he could get sicker, and then maybe he has a different spin on COVID moving forward. But regardless, I don't think there's a huge change in the markets between now and yesterday, other than he got a positive COVID, a positive COVID contraction, and probably not going to affect the markets a whole lot, other than it might actually help the negotiations with this COVID bill, realistically. All right, so that's my initial thoughts. That's why I'm like, I was telling everybody in the chat room, don't get too carried away here with stocks down. We do have non-farm payroll today, so that's another thing. So there. All right, now what we've got to do is we got to get through the charts. We've got to go through all these charts and get through them. So here's the euro dollar. Let's start off with that. So the euro, we are holding pretty much where we need to hold. All right, for the bullish dollar argument or the bearish euro argument. Let's be specific. Okay, so you see this fib level here. 38% retracement comes in at 117.63. Downtrend line comes in at 117.70, whatever. So let's just write down that is key. 117.70. As long as that holds, we have to remain bearish. Okay. We might have a little head and shoulder pattern developing here on the hourlies. Yeah, maybe, whatever. It's just as long as we hold that, we have to remain bearish. Oh, oops, I need to give us support. Sorry. Support here, 116.85. Okay. Cable. So the cable, 130, 127, which is the 200-day moving average. You guys know that. Yesterday, I told you just, we're going to be bouncing around between 128 and 130. Well, I don't think my opinion has changed at all in the least bit. Okay. You guys have fun trading it. 128, 130. And I'm going to leave it as range because it is definitely headline driven right now. Aussie. So the Aussie rejected where it needed to reject. Why do I say that? Because that was the broken channel. There's your channel. There's your channel. There's the broken channel. This is support. This is resistance. That all comes in at basically 72 cents. So we held 72 cents. So while we're below 72 cents, the risk is that we slip back to, back. Well, we can come all the way back down here, but at least for right now, it's 70.80. So 70.80, 72. We have to remain bearish while we're outside of that channel. Let's go over to the Kiwi. So the Kiwi, we had this bear flag developing. Unfortunately, I didn't play out my double top, stopped me out of that, which is fine. I mean, I think overall it's still bearish, and I think it's still going to make its way lower. We're going to end up doing this. All right, double top, bear flag, completing. It's going to end up getting down there one way or the other. It's just right now it's playing more into a flag. So resistance, previous support right here, right here. Previous support is acting as current resistance. It's a 50% retracement. That's 66.60. Okay, got that? All right. 1 second. Support is going to be the flag bottom that comes in at 66 cents. Oops. Dollar Canadian. This is my chart of the day yesterday. So we held inverted head and shoulder pattern, trend line support. This is really key. So 132.60 has to hold. 132, you can say 50, really. But 132.50. That's critical. It's bullish. Trading a little heavy right now, but above 133.50 would probably turn it bullish again. I mean, like near term. But you can see right here is holding for today. So I'm going to write down 2 levels, 133.30. Oops. Okay. Dollar Swiss, or let's just go working my way down here. Dollar Mex. So the 50% held. So I was thinking overnight we were going to dip down here. Obviously the Trump news kind of stopped everything. So, everything that I was expecting a little bit further lower. Like I have orders to buy more dollar Canadian down at 133.70. Those obviously never got triggered last night. It just because we're, the news about, Donald Trump and Melania, this, obviously stopped everything in its tracks. So I was looking for dollar Mexican peso to get down here to the 2160 level because I was going to start buying down here close to the 618. So now the 50% held. So that's support today. 2170, whatever that is, 2170. Is it 6 or 2? 72. 77. Sorry. Okay. I still think it's bullish. Resistance, I would say, is all the way up here. I think is what I wrote down yesterday too. 2220. Okay. Dollar Swiss. So the Swissy, we were looking for support to come down here to the 618 to 9144, which would have been 9150. What we are holding is the 50% retracement. So that's holding pretty well. 9175. Resistance right now. You can see this previous support has acted as resistance right there. So that comes in at 92.50, then obviously 93. So I am going to keep us in range, as you guys know. It's kind of mode right now. We have to get back above 93 for us to turn bullish. Dollar yen. Oh, sorry. Norwegian krona. Let's start there. So we're looking for a dip down to the 38% retracement, 9.25. We actually hit that perfectly, you know, and then bounced. So obviously that's pretty key support. But like the dollar Canadian, the US dollar Norwegian krona is trading a little heavy. And I don't understand why. Actually, here, I can give you my reasoning why. Because you might say to me, hey Blake, why is Norway and Canada trading so strong today with crude oil weak? I mean, crude's weak. You know, crude oil is weak in the last 2 days, and you would think that the dollar Canadian and the US dollar Norwegian krona would be a lot stronger, right? Logic, you know, weaker crude, weaker Canadian, Norway, oil producers, they should not be this, you know, not as strong as they are. What do you think? Well, my answer is because we're at key support. We may have been weak, but if you're looking at crude, you're probably thinking, all right, it's not going to break 36. Now, this is an opinion, obviously. If you're looking at it, you might be thinking it's probably not going to break that support. Or if you think it's going to break that support, you're probably thinking, okay, it's going to break the support, but I'd like to see it break before I take action. So, because we haven't been down there since, you know, what is that, June? All summer. So, you know, it's been holding all summer here. So it's like, okay, well, why am I going to be super bearish Canadian currency or Norway's currency if I think that crude oil is near support, right? So there's your argument there if you guys are wondering. Now, personally, I think the dollar Canadian is going to break higher. I think this is, you know, out of the bearish channel, inverted head and shoulder pattern, holding the neckline. As long as we hold above this, the risk is that we continue to the 200-day moving average up here or higher, 38%. You know, depends on circumstances at that point. But anyway, I hope that all helps you guys understand why I think the Canadian and Norway is trading a little stronger today. Now, let's say crude oil breaks 36. This US dollar Norwegian krona is going a lot higher, in my opinion. So 925. And just so you guys know, I mean, if you're a ForexAnalytix subscriber, you trade Norway. And by the way, this is one of my favorite Scandinavian currencies to trade. I know it's Stelios loves trading it too. there's a lot of volatility, and when it's moving, it's moving. It's fun. It's actually a fun currency to trade. You know, but if you look from the 28th September, which is Wednesday, I guess. Let's see. The US dollar Norwegian krona is back below the 200-day moving average. Any dips back to the 935 level should offer support for longs. And then the 30th, which would have been, was it? I'm looking. The 30th would have been Wednesday. Sorry. That's it. So Wednesday, the 925 level may be tested, which would be the 38% retracement of the recent move higher from the August lows. Look for support there. You know, and that was as we are up here at 135. Once we broke through that 135, I'm like, okay, this 38% retracement is coming into play. It's held, and it's held really well. So that's the place where I think we need to continue to look for support. Now, 940 is resistance. I think we wrote this down yesterday. And that's going to be key, right? And we're bullish. As a matter of fact, we're bullish while we're above this, you know, I think really above like 9, but definitely while we're above this 925. Okay, making my way lower. I got 10 minutes, and I'm going to bring Steve in. Steve, I'm assuming Stelios isn't here, right? I think he's on a boat somewhere. Dollar yen. Oh, no one's here. Just me and Dale. Dollar yen, 105 held. Now, yesterday I wrote down 105.15, right, as support. Obviously, the news that came out, it really is irritating to me because I actually closed a euro yen short yesterday. We were here. I'm like, okay, you know, we got this like inverted head and shoulder pattern. Stocks are holding up pretty well. You know, here's the neckline. We're probably going to get tested again. And, you know, I'm like, I'll just take it off. And then obviously last night happens. Yeah, no one can guess. No one can guess that, right? Euro yen or dollar yen, same thing. It's like you're sitting here, and all of a sudden the bottom, whoop, you know, but we are finding support at 105. So we're going to write down 105, but 105.15 is really support. 105.80 is key resistance, as you guys know, and we're still range bound. Dollar index, let's do that really quick. Sorry, I just drinking my coffee. 618 comes in at 93.50. Resistance 94. Actually, it's 94.15 right here. $93.50, $94.15. We're bullish while we're above that 618. Gold. Downtrend line comes in at 1925. We might test that today, depending on the data. We're looking to create 900,000 jobs, just so you guys know. Okay. We're going to leave that in range. Support right here, 1880. S&P, and by the way, gold's been really correlated with risk. Treasury Secretary Mnuchin tests negative for Friday for virus. Okay. And stocks are going up. I'm telling you guys, stocks are going to recover. Like, what's changed? I mean, really, nothing's changed. S&P. S&P. Where is my, oh, there it is. It's like, where's my spoos? Okay. So here's the S&P. We came out of an ascending wedge. Again, the reason why we broke out of it is, because of what happened overnight. But realistically, what are we in? We held 34. 34 and a quarter is big time resistance. We held 3,400, and 3,200 is going to be major support. 3,300 is near-term support. And we came pretty close to 3,300, to 3,310. Okay. So I'm going to write this down. 3,305, because that seems to be the spike low right there. So we created a higher low, right? 3,400 is resistance. And let's let the bulls and bears battle this one out right now, right? Rather than us trying to figure it out. Okay. So, Dale, Steve,
Here, Blake.
Steve.
Hey, Blake.
I'm
Hey,
here,
guys.
Blake.
All right, cool. So I'm done with analysis. I'm probably going to leave you guys with with the non-farm payroll. Stelios isn't going to be here today, is he, Steve? He's on a boat.
He's on a sailing boat enjoying himself.
And I sent a picture of me in the desert, because that's what I was doing last night. I was literally walking through the desert last night.
You see, life ain't fair.
It's not fair. He was on a boat in the Aegean Sea, and I was in a desert, realizing that I didn't have any water with me last night in 105-degree weather, going, oh crap, I need to turn around.
Sounds fantastic.
Yeah. Anyway, no, I was my kid had practice, and I was like just wandering around in the desert. But after I was listening to music, kind of thing, sweating my ass off, and then I was like, oh crap, I don't have any water. I need to get back. Anyway, but hey, we have non-farm payroll here. I'm gonna leave you guys with a couple things really quick. If you guys have not signed up for ForexAnalytix, this is the seasonal offer. Make sure you guys do so. This is here. I'm gonna go ahead and put this link. Remember, to be part of the giveaway, to the giveaway, you have to retweet this tweet or one of the tweets like this, and then respond to it. Say, I want to be part of the giveaway. We're going to three lucky winners will get 3 months free. And if you're a subscriber, you'll just get it added on. But this offer goes away this weekend. So you guys have to take advantage of it. And next week we will give away the free membership. So Steve, what's your thoughts here before non-farm payroll? I mean, I don't think it's going to make much of a difference, frankly.
Yeah, same here, unless it's like a number completely out of expectations one way or the other. What I wanted to ask you, because I managed to log in like literally 3 minutes before you called for me.
Oh, okay.
I don't know if you discussed the S&P, I mean, more from a fundamental perspective. Do you think that the reaction lower following the announcement that Trump has COVID?
I don't think anything's changed, Steve. I don't think.
No, I mean, do you think that the reaction to the announcement that Trump has COVID is an indication of how the market views a potential presidency from him? I mean, do you think that this is some type of confirmation that the market considers him a better option having to do with stocks?
No, I don't. I think it has more to do with negotiations of the COVID relief bill right now. And actually, that's why I think stocks are going to bounce back, because I think there's now a higher risk that a higher probability that the COVID relief bill gets done. I might as well stick with you guys during.
Hey guys, and Blake, if you have a chance, the interview today is with Ali, who's well known on financial Twitter. It's a forecaster for political races, and he's going to be talking about who he thinks is going to win the presidential election.
Oh.
And I just got a tweet from him, or a DM, that he was up all night because of this news. So it's going to be all about potential outcomes in the election for our interview today.
Hey guys, just thank you, Dale. And that's going to be interesting. Hold on. We got 15 seconds.
There it goes.
This is Bloomberg. They're looking for 875. This is data flash that comes with ForexAnalytix, and it's looking for 850. Watch how quick the numbers come out. We got the dollar yen here. Here comes the data. Stand by. Came out quicker on data flash. That's a miss, 661. Now, the unemployment rate was better. Okay. Wow. Look at Bloomberg. Still, I mean, Bloomberg just released the data just now. So, guys, I pay 20. Well, yeah, actually, I do personally, even though the firm, it's under the firm's name, I still comes out of my butt. $2,800 a month for Bloomberg. I incur those costs personally. Data flash, ooh, shoot, I didn't want to do that. Data flash is, sorry guys, I got to launch my, dang it. Everything just disappeared because I moved that data flash on accident.
Yeah, data flash is an amazing tool.
It is, and you guys get it with ForexAnalytix. So, you know.
And the thing they can see, Blake, or in fact they can hear, is that data flash also comes with a squawk.
Yes, it does. Yes, it does. Absolutely. So anyway, what I was going to say, guys, is you get that with ForexAnalytix, even if you're a light subscriber. That's at $19 a month. So take advantage of it. Okay, guys. Well, Steve, I'm going to pass it over to you.
Okay, mate.
And remember, guys, take advantage of the pricing. This is the last hoo-yah of getting the pricing at this rate for at least the next several months. And also make sure you retweet that tweet so you guys can, and respond to it so you can be part of the giveaway, because we're going to do random winners early next week. And Steve, Dale, TGIF, everybody else, TGIF. I'll catch you guys.
TGIF, Blake.
Yeah, I'll
too,
catch you guys
buddy.
on the week ahead.
Good
video.
luck today.
Talk
All
to
right,
you later,
thanks,
mate.
guys. Take care,
Bye-bye.
guys. Bye-bye.
So, Dale, do
Yes,
you
buddy.
remember our target yesterday with copper?
Mid 260s.
283. You remember equality target? We hit that.
Oh, off the flag. Yeah.
We hit that early on the day today, to the point.
I think
So,
there's
yeah.
more left if we take, I think mid 260s.
I think there is
What
a
do you
good
think?
chance that that's not it. That's
Yeah.
not it. Yes, I agree with you. But yesterday's play out of that flag, if you remember, we were testing the flag when we
Yeah.
were looking at it, was textbook.
Yeah. That the attendee right before we wrapped it asked to look at
Yeah.
copper, and it was right there when it was on the verge.
Yeah, and look at the move we had yesterday. So anyhow, we tagged the first target now there.
Maybe it was a tell for S&Ps.
Perhaps it was a coincidence, because as we've said, this correlation comes and goes literally.
Right,
I mean,
they all do.
Yeah, some of them are more reliable. That's what I mean. Some of them are like a lot more reliable. This one, it has its periods that, for some periods it's rather good, and for some periods it seems to be non-existent. So how have you been?
My alarm didn't go off, or I turned it off. I'm okay. How have you been?
Good. I mean, trying to recoup from the event and all of
Summit.
that.
Yeah,
Yeah.
we all are. I like
Indeed.
Celios's method for recovering.
Absolutely. Yeah, absolutely. Sailing boats. Yeah. On the Aegean. And we also have, these days we're going to have very, very nice weather. So yeah, absolutely. Okay. Any requests, Dale? And you'll need to help me with the questions because I came in late.
Okay.
Any requests from you personally before we go to people's requests?
Let's see your VIX chart with what's going on.
Absolutely.
It looks like a gap higher opening.
Let's
breakout.
start from the VIX. So the VIX, as you see, bounced from this confluence of supports. This 25 area is quite a significant area, and now we've been trapped for quite some time between this area of support and that area of resistance. So we're range bound between 25 and 31. Above 31, I think we're going to see a big spike higher. My assumption in that case would be a spike towards 45 once again, 45 a nice confluence of resistances for the VIX. So that's what I think about the VIX. Now, against 31, from a risk reward perspective, yeah, somebody can be short actually. But yeah, I think that there are decent chances that we're going to see a nice extension higher if we manage to take out 31. I'm pretty sure there are several stop losses there as well. So, that's something to consider, especially in the markets we have today. I mean, recently, that we know very well that financial products like the VIX can actually end up being more or less, a huge reason for big moves, on occasion. Okay,
So I'm
what
getting a
else?
few now. There were none before you got here, market specific, but now we're starting to get some requests that you could probably see, like natural gas and platinum. Nothing from earlier.
Okay, so let's then let's start moving through some things we can have a look at. Some of the I'll start with the metals, and then we can go to some of the effects that Blake doesn't cover within the T-chart that he does every day. So the rebound in gold and silver is ongoing for the time being, but I still don't see anything different, meaning I still see a decent chance that this can prove to be a recovery that's temporary. So one more leg to the downside would look great. $21 having to do with silver, and 1820, 1815, 1820, 1825, that zone there is also very, very interesting for gold. So something like this, I think, would be perfect. Now, the market, of course, doesn't frequently do perfection, admittedly, but sometimes it does. So from that perspective, from a technical perspective, I think that would be ideal. And I would definitely be very, very interested to buy silver, especially in that case. Gold, I anyhow own physical gold. Might as well buy some, in the financial markets if we go down there at 1820. Of course, as always, it's not only going to a target; it's the way you do. So it's the structure of the move. So I'm always paying attention to that. I mean, if we move like from 1900 to 1820 in like 2 days of non-stop selling, yeah, I'm not going to be buying, you know what I mean? So, but if we move in an orderly fashion and we seem to stall there and we have divergence, etc., then I'm going to be very, very interested in buying. Having to do with crude oil, we did have another down day yesterday, so perhaps we will get my wish fulfilled, which has always been, if you remember, to see one more leg lower towards, at the very least, 33.50, 33.80. As I said, I wasn't willing to buy higher than that, and if it wanted to run further, it would have to do it without me having a position. As you see, this is also perfectly confluencing with the quality target from this first leg lower with the rebound and another leg lower. So this 33.50 to 34 area, quite an interesting support area. Once again, I'm going to reiterate the same thing I said about gold and silver. It's not only going for a target, it's the way you do it. So if for some reason, the floor, just collapses and we start plunging lower, I'm going to start looking for my initial, very, very initial target when we were talking about the possibility of crude breaking down. If you remember, I kept saying that $29 is an ideal target for me. I mean, that would be the area that ideally I would want to get involved. Having seen the move so far, I think that we might not get there, but at the very least, I want to see 33.50 to 34. Having to do with natural gas, we still have this ongoing move lower, but keep in mind that after like 5 days, 4 of which have been a sell-off, we have barely retraced a little bit more than half of that up day. So I think there is a very good chance that natural gas is going to find support rather soon and produce another leg higher. A nice area from which that might happen is this one, $2.2 more or less. give or take. Okay, so if we make it back to $2.2 in some kind of orderly way, that's also an instrument and an area I would be interested in buying. So I think that covers these type of assets. I think it's a good opportunity to have a look at a few FX pairs that we haven't recently done. Use the CNH. Yeah, actually, something. We can start from that. Somebody just asked about it. I was having a look at it yesterday again, and admittedly, I think it's worth talking about it because the last time we talked about it, we were nearing this descending channel trendline resistance, and that's where when I said that, listen, this is a pivot area, this channel is a pivot area, and especially this confluence, because we back then were confluencing with this horizontal support resistance area roughly at 685, and they said that, listen, 685 is a pivot area, so against 685, and the closer we get, the better the risk reward to be short. But on the other hand, breaking through 685 should extend this move towards 7. Why 7? First of all, this area near 7 is a horizontal support resistance area. Second of all, we have the 200 daily moving average that is converging there. I'm assuming that in a few days it's going to be on top of it. But the first scenario played out, and that's why we always say that unless you have a very, very good reason and a very, very appealing risk-reward ratio, you should always go with the direction of the trend. Because once again, we got rejected. So this downtrend, this descending channel kept holding. And now, actually yesterday, we produced a lower low. And now we finally might start seeing some indications of divergence here, right? RSI for the time being is diverging. So 670, 671 horizontal support resistance area. We're already seeing some divergences. So I think pressing your luck to the downside, perhaps not such a good idea anymore. Okay. 670 is going to be the next pivot area in essence. Now, what we haven't talked about in at least a few days, unless Blake did it outside of the T-chart, is some of the euro and pound crosses. So here it is. First of all, Euro Aussie. Euro Aussie got rejected once again from this confluence of resistances, horizontal support resistance area, and this triangle trendline resistance. So we're once again in the middle of this range, or triangle, depends on how you want to look at it. So bottom line, nothing to see here, but keep in mind that prolonged periods of consolidation like the one we've had here, almost inevitably will get resolved with volatility spiking, which means that I think there is a very good chance that once we see a breakout either above, let's call it 166, or below 161, roughly, I think it's going to produce quite a nice move. Now, if it's a continuation to the downside, from a technical perspective, I would have to say that it's a little bit of a likelier scenario because the prior move to the consolidation was, to the downside. I would be looking then for much lower targets. And one of the reasons I would be looking for much lower targets is because keep in mind that we also have this channel that its support seems to still be, valid. So I think it's going to be a major breakout going below 161, a major breakdown in this case. So, a move towards like 155, quite a likely scenario. In the case we break to the upside, I'd have to say 171. So 500 pips, I think we can see 500 pips either to the upside or to the downside once we see a breakout. So I think Euro Aussie is a nice candidate to have in somebody's watch list. Now, Euro Kiwi, technically speaking, not that clean, although this expanding triangle here and this horizontal support resistance area did the work once again. We got rejected. more or less the same deal. Watch this formation, break to the upside, should get us back towards 182, 182 and change, break to the downside, should get us like towards 171, just below 172. I think between the two pairs, I like the euros much better from a technical perspective, so I would choose to trade that one. Now, having to do with the equivalent pound pairs. So here's the pound Aussie. Pound Aussie produced a lower low in that case with a huge divergence here, right? You can clearly see it. Nice rebound since we got rejected from that area once again, and now we're pivoting between support and resistance areas. As you see, it's not random that they have specific support resistance areas. You just, you just go back to the chart, you inspect where price seems to be finding support and resistance, which means where the supply and demand zones for any instrument are. And these have the tendency to act again more or less in the same manner. So 180, 150 resistance, back to 175 if we don't make it here. Although I have to say that from a short-term perspective, what I see here, I would probably expect an extension towards 184 as a likely scenario before we make a serious decision on what's happening here. And here's the pound Kiwi. Now, the important thing about the pound Kiwi is the big picture. Why? Because, in the long term, we've had this beautiful channel. I mean, look at it. It's almost perfect, right? And, this type of a formation is too perfect to ignore. Now, this type of a formation tells me two things. The first thing that it tells me is that it's extremely likely that this move here is, what move is this, Dale?
Show me again.
What type of a move do we have in this channel?
Oh, corrective.
Exactly. So this move is very, very likely corrective. But how do you know this? Very simply put, because it took 313 days of trading to depreciate by 34%. And following that, it has taken, okay, let's take the high. It took following that almost triple that to appreciate a fraction of that. Okay, so, just by, in essence, comparing momentum and speed, you can understand what's happening here. The problem, though, is because, from a long-term perspective, that seems quite clear. The problem is that there is absolutely no indication that this thing is over. So somebody might be, oh yeah, I mean, this guy has a point here. I mean, it makes sense. I'm going to be short and wait for it, right? And in essence, even get paid a little bit to wait for it because it has a little bit of a positive carry being short here. Yeah, the problem with this being that, who tells you that something like this can happen prior to that, right? Who says that we can continue oscillating within like the channel before we break down? Nobody. The only indication that that's not the case is an actual breakdown from this channel trend line support. So, the closer you are to support, as was the case here, you have a fine risk reward in being long. On the other hand, you break through that, I think being long is an extremely dangerous proposition and you're probably going to get seriously hurt. So pound Kiwi, so to summarize, euros and pound Kiwi, both of them in different time frames in my watch list. Okay. The other two, not that interesting. Dale, sorry, I last yesterday about you being the whole election thing is frustrating to me because I love the USA. Sure, you do also, but what grips me is that there is a difference between mail and absentee ballots and mail-in ballots. Okay, I don't think Dale, was offended. Don't worry about it.
Oh yeah, it's okay, Rick. We're all on edge, buddy.
Yeah. What about Aussie yen? Okay, Aussie yen. And since we're talking about it, we might as well have a look at Kiwi yen as well. Yeah, if I type it correctly, we might. Sorry, new keyboard today. Okay, so Aussie yen. Now, this channel worked wonderfully, having to do with pinpointing support. Now we back tested this horizontal support resistance area. Seems to be working for the time being. Listen, the trend remains higher. Momentum has definitely been diminishing. I wouldn't be doing something with Aussie yen unless either A, it breaks down from 74. I think a breakdown from 74 is going to be quite a nice breakdown and should produce some nice follow through. I think we should see a move towards 70 if that's the case. On the other hand, you want to try being short again without waiting for a breakdown. If you get lucky and we get another move towards 78. Now, alternatively, a break above 78, that's going to be quite a big bullish development, right? Because this channel is not really steep to the upside, which means that it's not like difficult to think of it as a consolidation pattern before a continuation higher. So keep in mind, that's totally a possibility, right? So 78 to 74 is the range. In between, you need to play on a scalping level in between, at least for my standards, which I don't do. I mean, I will, the maximum I'm willing to go having to do with lowering time frame is go to a 4-hour chart. And I'm going to do that just to, work on entries and exits. Personally, I don't go below the 4-hour chart ever. I mean, it is really useless for my personal trading style. Okay, it's extremely useful if you're a day trader. Absolutely, you might use a 30-minute one. I don't know. You might even use a 5-minute chart, the hourly, the 2-hour chart. But for me, anything below 4-hour charts is noise without substance. Kiwi yen. Watching this formation, you can see this triangle here. We've already broken through this channel. You can see the blue channel. But admittedly, since there is no
I'll be back in a minute, Steve.
Absolutely, Dale.
Okay,
Absolutely.
just want to let you know. Okay.
Absolutely, mate. So I'm mostly watching this formation, this triangle, and keep in mind, as I said with the Aussie yen, this formation can easily prove to be a consolidation before an extension higher. Okay, so don't bet necessarily that this is some type of a topping pattern. It might be. We already know that 72, and I'll show you all the reasons. 72 is an extremely powerful resistance area, and you can see all the reasons here. 72, first of all, in a few days is going to be where this descending channel trend line is going to be passing from. Second of all, it's the 88.6% fib from this move lower. It's also this horizontal support resistance area. It's also this triangle trend line resistance. So you see, I mean, it's like, it's even a retest of the broken blue channels trend line support as resistance. So 72 is super important. I mean, unless we break through 72, I really can't get convinced to be a buyer here, right? But if we do break above 72, I think this pair will fly. I mean, we can find ourselves back to 76 in zero time, because especially this type of pairs. In the past, it was more the case in the past. I mean, some of the yen pairs, I still remember the days that they could easily do 300 pips, 200 pips, 400 pips in a day, and they could do that for consecutive days in a row. And back then they even had a nice carry. So if you were long the Aussie yen or the Kiwi yen, you actually made some decent money holding. Of course, that's not the case anymore. I mean, they still yield something, but nothing to write home about. Yeah, that's what I think. 72 key areas resistance, and in order to see more downside, we need to break through 69. If we break through 69, I think we have a nice air pocket of 300 pips. 69 to 66, I really don't see any support in between. So I think that's also going to be a nice trade between 69 and 63. Aussie Kiwi, a risk on, risk of correlation with the S&P. Normally no, but it does have a little. I mean, the correlation is not non-existent, but whatever. I wouldn't be trading based on that. That's what I mean by whatever. What I can tell you though is that this move lower, which is so beautifully structured within this descending channel, doesn't inspire for anybody to be bearish, right? So simply put, if you're really looking to trade something that is completely uncorrelated with the dollar or almost completely, because somebody can make the case that if there is a little bit of a positive correlation with risk assets, we know that risk assets have a negative correlation with the dollar. So just by extending all that train of thought, you can make an argument that there is a insignificant correlation, almost insignificant correlation with the dollar. But of course, that's the completely wrong way to look at it. In any case, I do think that this looks nice. If we break through this channel, I think that the Aussie Kiwi can push to new highs, right? It's going to be a slow trade. Bottom line, what I'm trying to say here is that it's one of the few cases that, taking into account volatility, which you should always do, taking into account volatility, but in this case, taking into account volatility, it should push you to increase your leverage, because this is the type of pair that can move really, really slowly. So if you take like a regular size position, even if it starts moving, you might need to wait for a long period of time to actually make something from it. So if I was to trade this personally, I'm not, this is not advice for anybody. I'm just saying what I would be doing. I would probably use at least twice the size of a normal position, perhaps even more than that, 2.5, 3 times, taking this trade for it to, to have a point of being in, in my trading book at that point. Dimitris, hey Steve, could you please RDSA. What am I looking at, Dimitri? In these two tickets? Oh my God. Royal Dutch Shell, yes. Yeah, dead cat bounce here. And this chart looks like death. This chart looks like death, literally. The fact that it didn't even manage to produce a higher high here. We had a textbook. Look at this. Textbook, nice rebound. You would expect like an extension, right? Before lower, we didn't even manage to produce a higher high. And look at this. It's beadless. Yeah, this looks horrible, really. I don't know, mate. I don't know, but it really feels like trying to catch a falling knife here. Yeah, I really don't know what to tell you. Let's fib extend this, but it looks really bad. Let's fib extend this rebound and see what we get. Oh, sorry. What am I doing? We need regular retracements and just the extensions. So let's see. Extensions. Yeah, as you see, next downside target 766 to 127%. Don't try to buy this. If you want my opinion, don't try to buy this. It looks so heavy, and even the rebound was looking so bad, and even the way the RSI is moving. I see nothing positive. I have nothing positive to say about this chart. It looks like hell. Any arguments against being short Euro USD for long-term trade? Yeah, actually many. many arguments, but let me finish with the other instrument our friend here wanted, and then I'll tell you. Yeah, this looks much better, by the way. This looks much better. I mean, quite a nice move higher, right? And look at the move lower. I mean, I think this looks decent. Okay, got it. About the rest, we have to go tomorrow, but give me 10 seconds to answer just that. Bullish arguments, reasons for not being bearish the Euro USD. One, we've broken through this major trend line resistance and it held the support. As long as it does, yeah, that's the main argument. And second of all, I've said it before, there is no Western country on the planet with worse fiscal status than the US. End of story. I mean, hands down, and no question about it. Okay, Dale, enjoy your interview. I'm going to try to listen into it. I think it's going to be very interesting.
Okay, thank you, Steve. Welcome to Face, Ali.
Okay.
Howdy.
Are you going to be sharing the screen at all, or
Yeah,
we're just?
let me. I'm not a big Zoom guy.
It's that green box. Share screen.
Yes, stop your. You can't start your video because the host has stopped it. That's what it says.
Okay, you don't want to start your video. You want to share the screen. It's a green box.
If you want to
To the
open your
right.
camera as well, I can make that happen. Okay, there it is. If you want to switch on your camera, I just enabled
Yeah,
that
there
for
we
you.
go.
Okay,
There you go.
Ali. And to share the screen, it's a green box. Oh, you
I
just
don't-
want to do this. Okay.
Yeah.
Right,
It
Ali.
wasn't giving me the option.
Okay. Well, you know, thank you so much. You told me you only had 2 hours sleep last night because of the breaking news of what's happening to the president and the first lady. Before we get going, I just want to read what you sent me about you so people could understand. And I appreciate your transparency about, you know, what side of this election you're on. Ali Alexander is a 13-year veteran of professional politics and electioneering at the national level. He's a pragmatic conservative Republican aligned with the Trump administration. He's also an activist and does some of his public-facing work at founders.alialexander.org, where he delivers exclusive reports and analysis for some of his members, creating a hybrid model for those who can't afford or don't need lobbyists but can benefit from the work of having the inside track. So nice to meet you. And you know what we're going to prove today, Ali?
What are
That
we going to prove?
people could be on different sides and have different opinions and be maybe, I really never classified myself as either, pretty much independent. I don't think government should legislate morality. So, to me, that is, kind of libertarian part of me. And before we get going, I'd like to ask you, how did you get involved in it? Was there some major political issue, or was it a lot of people end up having the same beliefs as their family? So tell us a little bit about that before we get going into your work.
Yeah, well, thanks for having me, Dale.
Welcome,
My
buddy.
friend Ed is a huge fan and said, hey, you got to go on this. And so I said, okay, let's do it. And so it was a lot of fun. My mom's a lawyer. I grew up phone banking for judges and, sometimes door knocking for local politicians. But I think I always knew I was going to end up in politics. But I did get here kind of unconventionally. I dropped out of college twice and then decided to start my business inside of politics and accidentally blew up. I think the man met the moment and I survived the moment. And, kind of the rest has been history. But my mom's politics and mine aren't exactly the same, especially when it comes to this administration. And
it's gonna be fun. Can you guys still have Thanksgiving and Christmas together?
Yeah, as long as we keep some topics off the off the table. This is the first time in my career where we've had to say, hey, there's some things that we just can't discuss. And but
well, it's the first time in a lot of people's lives, Ali. I mean, I can never remember a time period. I'm at least a year older than you, where we've had to, not talk about politics or religion or anything without people getting upset enough to leave. And I mean, it's gone to the point where I saw a tweet where someone was saying to his dad, it's either Trump or your grandchildren and me. Yeah. And to me, that is so terrible. Okay, yeah. So, all right. So major breaking news. And I haven't been watching the news. In fact, Ali, I overslept today, and I had cobwebs at the opening of our show today. Why don't you get me up to speed about how this recent development is going to play into this next 4 to 5 weeks?
Well, I think it's going to be pretty interesting. A lot of Trump supporters were pretty down and out, not just because, this is a health scare, but because this may take away from a week or two of the president campaigning and doing his kind of now iconic outdoor rallies with tens of thousands of people or so. And so I think that there's a lot of, somber attitude on the right. I think that the left is you've got professional people who are keeping it professional. And then, you've got some of the feral people in the grassroots of the Democrat Party who are wishing death threats and death wishes to the First Lady and the president. But, that kind of
you know what, you're right. You know what, how I know you're right? I know
Did you read the replies?
No, because I know people during this whole COVID, pandemic that have said something. Well, wouldn't it be something if President Trump got COVID?
Yeah.
Almost like, so, and I don't think it's right. I mean, there's some celebratory probably attitudes going on. Well, it serves him for, making fun of masks and all of that. He's still our president, and more than that, he's a human being. Okay.
Exactly.
And so, I'm not happy about it. Do you think this might end up creating some sympathy for him? It's hard not to be sympathetic to someone who is ill.
Yeah, I actually don't think it will. I mean, a lot of my contemporaries actually think I'm wrong. They say, hey, this will help him where he needs help with suburban women. There is a soft, actually, Republican vote for him, the suburban women. It's why Republicans lost the House it's part of the reason why the Republicans lost the House in 2018 is Trump kind of drags us down a little bit with suburban women. And so some of these Republican districts went Democrat, the Orange County districts, Georgia's 6th congressional district. So some of these districts, Trump does need to improve his numbers with suburban women. But I think the major benefit from this is that everyone's going to be talking about Trump, and he always benefits when he is the narrative, when it's a referendum on him. And so I don't think that there's going to be much room for policy alternatives or Joe Biden's ideas or anything else. Every day, everyone's going to be checking on what is the president doing? What is he saying? And he's going to have total command of the narrative, I think, over these next 2 weeks.
Okay. So before this happened, what's the name of your friend who referred you to me that I interviewed?
Ed Dowd.
Ed Dowd. Okay. So Ed was telling us then during his interview that your work showed President Trump in a very solid lead, and it looked like he was going to succeed in this election. Tell us how your work shows that and how it differs from the polls that showing Joe Biden with anywhere from a 5 to 7 point lead, depends on the polls. And
right.
Obviously, we're all skeptical of the polls after 2016, right? So
Yeah.
how does your work differ from standard polling, Ali?
So I'm trying to do a quick rundown is near impossible, but let me try and filibuster here is polling essentially is a little voodoo math. And it's a little bit of science, but what you have to try to predict is what is the turnout model? Who's excited to vote? Who's going to vote? And then you can start polling those target demographics. And what we believe is that, what the Republicans believe is that the pollsters got it wrong again. So they're showing that Joe Biden has a 10-point national lead. And then when you get into these swing states, it's 5 to 7 points. And when you calculate that out, a Republican can win if a Democrat is polling anywhere from 3 to 5 points. And so what you have to kind of reconcile in your head in the system of federalism and the Electoral College is that because someone is polling nationally ahead doesn't really mean much. They have to be polling by a margin that indicates that the swing states are breaking down one way. And then you've got segments of swing states. So for example, where Trump did well is where Reagan did well. There's Reagan Democrats, the Rust Belt, the Midwest. So that's an entire demographic. And then part of it's more Catholic than the other, and part of it's not. And then you have states where there's a Latino play, Arizona and Florida, and that polls differently. So essentially what you have to do is you actually have to dive into the state polling, totally reject national polling, and you have to see where are these campaigns putting their resources. Because while you and I have access to all this public polling where it's costing them, $10,000, $20,000, the campaigns are spending $50,000 to $100,000 to do internal polling. And internal polling has larger sample sizes. They do deep dives. They are tracking voters sometimes week to week in particular states. And so they know what they're doing. So part of my benefit of what I can share with not just my clients behind the scenes, but now I'm sharing with the public these past 4 years is if you watch it's a little like Art of War. If you watch the Joe Biden campaign pull its resources out of Florida, or you watched a month and a half ago, there was uproar amongst his Latino staffers saying, hey, they're not putting enough resources in, and they weren't doubling the staff at the time that they should. It was kind of a concession in Florida with the Latino vote there. And so I was able to predict 4 weeks early that Joe Biden was having a Latino problem. And then that got confirmed a week and a half or 2 weeks ago. And now you've seen us transition from what I call the second map, which is they need to make Arizona competitive, which I don't think will happen for Joe Biden. And they've got to win Florida, which I don't think will happen for Joe Biden. And they've moved back to the original map. This is a map that both campaigns want to fight. And that's Wisconsin, Michigan, Pennsylvania, and maybe North Carolina. And so that's where we're fighting. So you're looking for tea leaves, you're watching state polling, and you're just seeing where the big guys moving their resources, because they're not moving them for no reason. These are $10 and $20 million moves when you make a move, and it's based off $100,000, $150,000 polling.
What do you make out of the narrative of voter suppression, starting off with the post office and trying to get rid of mail sorters and one mailbox, for every 50,000 people in Texas. And, do you think that, basically there are bigger numbers of Democrats, right? It's a numbers game. And do you think that we could be heading towards a situation where Biden could win the popular vote and lose the Electoral College? Is that kind of the setup that we could be looking at, like 2016?
We could, but I actually don't think that that's likely. I think that Trump, if he wins, will win the popular vote and the Electoral College. So I think that we have a greater chance of whoever the winner is. And just so everybody knows, there's one contest. The popular vote is a colloquial term by the media. There's no such thing as a popular vote. The media's invented this thing. We live in a republic where the signers to the compact, to the contract that we call the Constitution, were states, and so it wasn't like these aristocrats went and signed their name and said, well, my family and my family and my family. or percentage of the population. No, people were elected by their states, and those states then formed a constitutional convention. And this was after the failure of the Articles of Confederation. So people really have to understand like this, you know, I know that we live in a modern world and in the information age, and it's easy to say that some of these systems are archaic, but there's one system that elects the president, and that's the Electoral College. But I actually think that with this election, we're going to have the winner of the majority of all votes cast in the nation and the Electoral College will likely be the same person. And but I got to tell you, even before the debate, Biden has, you know, I had Trump as a huge winner, but this is about even now because of some of the decisions coming out of Pennsylvania, Wisconsin, Ohio, and Michigan. The courts have totally changed the rules after early voting started. So so Biden got a lifeline from some federal judges 2 weeks ago, and I think it's put this race at back even.
So you think this race is even right now? Right
now it is. And I mean, it was kind of shocking to me. I really didn't expect the courts to make the decisions that I think they're making. And, you know, I'm a Republican, but I think that these decisions are dangerous, and I think that they're quantifiably dangerous. And so, for example, for the Pennsylvania Supreme Court to say that we're going to suspend state law. Okay, so the court has now made itself a policy body. We're going to suspend state law and declare that you can accept ballots after the election day. But then we're not going to suspend law for the poll watchers. So the poll watchers in Pennsylvania have to be from within the individual counties instead of the state, which is not a requirement in most states, by the way. It just reeks of partisan bias. It just reeks of partisan bias. And then while the courts are trying to protect their butts on this whole postmarking issue, which is, okay, if I mail in my ballot, it's an absentee ballot or it's a universal mail-in ballot, does the post office have to postmark it? And what does that postmark date have to be? And the courts are saying, oh, it has to be by election day. But if you read these opinions, it says, or no proof that it was sent afterwards. And, you know, if you're like me and you actually do still send mail, you'll notice that a lot of times your mail is never postmarked, and especially if it's sent within the same town. So this is, I got to tell you, I don't think that there's been a bigger threat to democracy or our republic than what Democrats are doing in gaslighting this mail-in voting system. Our post office is not equipped to handle this. We aren't equipped to monitor this. There's no way to challenge this. These are going to be decisions by random judges, and each of them can all make different decisions because states govern their own elections. So it's not like the Supreme Court can come up and say, you know, they're not constitutionally required to come out with a national standard on how states conduct their postmarking review. And so I think we're playing with fire, and we're seeing the vulnerability of federalism right now. But this is Gore v. Bush on crack. I mean, people have no idea what's coming for us after this election unless there's not a clear winner.
And you know, no one has an idea. So
right.
We know it's going to be contested if it's close, right?
Yep.
I mean, we really needed a clear victory, and even a clear victory. Your guy said that if he was on the other side of that clear victory, that it couldn't be a valid election. First time in my life, Ali, that I've ever heard a president, an incumbent, say that he wasn't going to accept the election results if he lost, and that he wouldn't commit to a peaceful transition of power. Have you?
Well, I wouldn't agree that that's what he said. What he said is if we see examples of fraud, then he will not. So if the, you know, it's like, what does it mean to have a clear winner? You know, is that the AP calling it? Is that MSNBC calling it? Is that Fox News calling it? And so what we've traditionally relied on in this country is projection. So since the advent of modern media, what you do is you rely on the media talking to secretaries of states. Secretaries of states will tell you which way it's going to be. And then the media calls the election, and then the presumably the loser concedes, which does trigger certain legal, it takes away certain legal remedies from you. And so conceding, when you concede, for example, no one can act as an agent on your behalf. So imagine you telling your broker, I don't want to invest in any FANG stock, and then they invest, they're acting, they can have the power of attorney, but if you're giving them clear instruction on things not to do, they're not allowed to do it. So that was a part of the significance, for example, of what created a secondary legal question when Al Gore conceded the race, and then his lawyers told him to unconcede. He created something that has never existed in America or English common law. And so Gore started this mess where some candidates unconcede, which does not have a legal precedent, and it's still kind of willy-nilly. But
is it even in the dictionary?
No, it's not. It's a little like when politicians say, I misspoke. What does that mean? You can only speak once. But no,
go ahead.
What I heard President Trump say was, again, if there were tens of thousands of examples of fraud, then he wasn't going to concede till they got down to the bottom of it. And I think that both candidates should keep their legal options open. I think that the American public should be certain. And if we're going to all of a sudden wait for elections to be certified, which we've never done in this country, then let's go ahead and wait for that. But if we're waiting for Joe Biden's endorsers, these newspaper endorsements, so if we're waiting for the media, which is on his side, to say Joe Biden won, Trump shouldn't concede. And so it's very bizarre what's going on, and everybody's guessing, oh, well, it's going to look like a red mirage, and then it's going to be Joe Biden who actually won. I think that I just think it's really reckless for the media to be talking this way. None of us have any idea how this is going to work out. And if it looks like that, you could accidentally trigger a civil war, and or maybe purposefully, if you ask some of these Antifa thugs out in the street.
Yeah, there's a lot of guns in America, aren't there? I mean, I could remember the 60s where we had a lot of turmoil in the streets, but I don't remember the people in the streets carrying around AKs. Just walking around in a protest, and both sides, right? So they're both armed. And it wasn't like that in the 60s. I mean, it was mainly Molotov cocktails and breaking windows and setting fires. But, besides Kent State and a few other incidents, the public didn't walk around ready to, go into battle in the streets. It kind of looks like that to me. I'm concerned. Do you think that that is a possible outcome if we don't have a result? And how long do you think it's going to take to adjudicate this? Because don't you believe it's going to end up in the courts, Ali?
I just hope and I pray not, because that is a ticking time bomb. Our system, it's kind of strange because our system has scaled so well, across a couple hundred years. Because you got to imagine a lot of countries, there's the president isn't in office for months, longer. And so what's really interesting about our system is we vote on the first Tuesday after the first Monday of November. In November, we have the Electoral College, I think somewhere around December 10th or so. And then the House has to certify the election. The Senate recognizes the certification, and states don't even have to have their elections officially certified until at least just before inauguration. So there's this ebb and flow to things that lead up to January 20th, which is the inauguration. And so we really have to have this stuff figured out by December 10th. But honestly, I think anything longer than 2 days will put this country psychologically in a place that we're not prepared for. And the loudest voices will be in command of the system. And nobody knows what that means. And I do think that this country, I don't know how else to put it, but I do think that this country is ready to be at each other's throat, to put it politely.
Okay, how do you prepare for something like that besides getting on an airplane and looking for a haven?
Yeah, it depends on your predisposition, whether you want to be here for it or not.
I'd rather watch it on TV.
Yeah, then I'd get the heck out of Dodge. You know, population density is going to matter. I think there's going to be, you know, just saying this, if something like that did break out, heaven forbid, you would see white people on the left believe that, you know, even let's just say dumb white people on the left who think they're down for a cause and down for a revolution would find themselves sometimes on the opposite side of violence, but with their own side. And likewise, on the right, you could find people who defer to authoritarian forces or badges and find themselves on the opposite side of the same side. So it's really interesting because we can't appreciate that our country is a non-homogeneous, you know, there's a lot of races, a lot of religions, and then the population density, the cities will operate very different than the suburbs, which will operate different than the rural places. So if it was me, I would not be caught dead in a major city election night, you know, and I just wouldn't, or the next day. And especially where you've seen any of these arsons or riots break out. And what I like to tell people is people protest in the day. The people at night are not the people who protested in the day. These are two separate groups of people. And there are people who hate both the left and the right and want to see this country descend into chaos. And then what happens is a youth element gets involved that's just kind of ignorant of it, but ready to play with fire. And so if it was me on election night, whichever party, I wouldn't be in Chicago. I wouldn't be in New York. I wouldn't be in LA because people are going to look for excuses to commit violence and to get away with other things, regardless of the outcome or not outcome. And that's going to happen. So that's pretty much set in stone. So I would just suggest that people, you know, order the food that they need, you know, for a couple of weeks, you know, stock up on water. I mean, I don't want to sound like a prepper, but if you can be home, if you work from home, it's a good couple of weeks to stay home and assess whether you need to travel outside the country or not. Because if we get to December 10th and both parties have decided to opt out of the political system and they're then trying to abuse the political system, it will turn into political assassinations in no time. People have no idea. But what you're talking about in the 60s is people have to remember there were a few political assassinations, but there weren't just arsons, Dale. There were bombers. And I'm not just talking about Bill Ayers. There were a ton of them. I mean, and some of these people are college professors now. And so this generation is going to do way, 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 way worse. I mean, this is how I historically put it into context. You're looking at the Civil War, and this is the idea that neighbor is willing to kill neighbor. You're looking at the 60s, which is people who know that you can do ever increasing radicalizing moves to gain more people for your side, and that you don't need a majority, you only need force. And you're looking at a 1920s type of Bolsheviks style revolution where people have a political agenda that is kind of organized in it's kind of like organized crime. And some of this involves funny money, and some of it's ideological, and some of it's both. And you have all three of those elements swirling right now. So we need a miracle, or we're going to dive into human nature without a doubt. So I'm praying for a miracle.
I'm with you, buddy. I'm with you. So, definitely nerve-wracking on top of a pandemic, on top of an economy that took a body blow. And I'm hoping that people can see that we're really all brothers and sisters, and that, this is going to be a crisis, but the definition of crisis is danger and opportunity. And I hope that our country doesn't miss the opportunity during this crisis to heal, to mend, and reunite. In some manner, it's going to take time to heal, but you know what? I'm still going to stay bullish America for now. that we will persevere no matter what happens, that we'll come together. Otherwise, our next interview, I'll be speaking to you from the Grand Caymans.
Well, that sounds
and,
good.
and really, it was really disturbing, but very interesting talk that we had today, Ali. I appreciate you coming here. And you know what? You and I just had a civil conversation, and we have different ideologies, and I can respect what you say and what you're thinking. And there wasn't one name called between you and I. And why can't that happen again? That's
and I
my
think it
hope.
can. If we decentralize media, if we have groups like yours and find communities of like-minded people, I think we'll get along. I actually think that centralization has created this headbutting. I think most of it's a mirage. I think people want to get along and people want to debate the issues around money and the issues around policy. And we've just kind of been told that we hate each other. I'm not convinced that Americans do hate each other, but I am convinced that we can be psyoped into a war. And I'm going to do everything I can to avoid that. Thanks for having me, Dale.
Oh, it's great. Well, maybe in 2024, we could prove it by you and I being on the same ticket.
I'm going to be supporting Kanye West. But seriously.
Ali Alexander, everybody. And you could follow him at Ali and keep in touch with him. It's a pleasure meeting you. Normally I tell people that have an interview with me that they're now my trading warrior brother. I'm just going to say, Ali, you're my brother.
I appreciate it, Dale. And you're my brother. God bless everybody.
Buddy. All right,
Bye.
everyone. That's going to be a wrap for the week, everyone. Enjoy your weekend. Remember, don't just count your pips or your votes or your ballots. Count your blessings. And let's keep our heads about us and lead from the heart. I'll see everyone on Monday. Adios.